Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have some data coming out of the US this afternoon. We have that weekly unemployment claims, existing home sales, the Philly Fed manufacturing data, and perhaps most important is a testimony from Fed Chair Jerome Powell. Let's look at how markets are faring, starting off where it does all start with the US dollar. At the moment, we do have this uptrend that is in place for the dollar basket that we're looking at now, or the dollar index. And within that uptrend, we've had these brief pullbacks, and they've taken these the shape of this flag formation. Now, flag formation is generally a suggestion that that move down is weak relative to a strong move up, and that a longer-term trend is setting up to continue. And so what we've had here is we've had a breakout from that flag consolidation. We've had another little bit of pullback, and now we do look to be extending that. So it does look like we could have some strength coming into the US dollar at this point in time. We have this bullish engulfing here as well. I think traders who are long might want to have a stop loss below that 105.70 mark. And that's targeting a move to test this recent high at about 107.00. If we do get through that, we manage to get a close above that, constitute a short-term breakout, and we can start looking at this overhead resistance, this trend line I've got on the chart there. And that next level of resistance currently anticipated at about 108.10. Now, euro dollar, similar chart, but obviously inversed, because we do know that the euro has a strong weighting in that dollar index price. At this point in time, we had this downward channel, so euro weakness and dollar strength. Looked like we were breaking out of that channel, but that breakout did fail quite abruptly with this bearish engulfing candle pattern, that long red candle, which completely engulfs that preceding candle. Then we had a rebound off this 104.93 level, and now we've had another bearish engulfing. So that is suggesting, and that's at resistance of that 1.0575 level. So it does suggest that we could have some short-term, more downward momentum on the move. We're retargeting that 1.0493 level. If we get through that, close below, we constitute a breakout, and then we start looking at 1.0445. I think traders are short there. Might want to have a relatively tight stop above this resistance level, the level that's acting as resistance right now, and that's at 1.0575. Now, looking at cable, pound versus the US dollar, we do have another similar picture there where we have this downtrend is in place. We started to accelerate, capitulates a little bit. We've had a rebound from oversold territory. That took us back to about 1.2300. And from that level, again, we've had this bearish engulfing, suggesting the end of that move higher and continuation on the downside. And that hit a confluence of resistance, that horizontal level at 1.23, as we said, and a dotted trend line on our chart, extending the move lower after a very brief rebound. And we are looking at a move towards that 1.2040. I think if you are short on that move there, from now, it might be a bit tricky chasing it lower, but if you did get a good entry, you may be looking at a close above a 1 or a 2-day high as a possible stop loss indication, depending on your threshold for risk. Moving over to some indices now, and looking at that US tech, or that Nasdaq 100. So short to medium term, we've talked about this range-bound trading environment. That longer-term trend is still considered up. We see the price still trading firmly above that 200-day simple moving average now. Well, last time we looked, we had an upside breakout. The price moved quite promptly to its 15,250 target, from where we've seen a bit of a reversal on the price pulling back. Because of that underlying, that longer-term trend being considered up, we're not looking at shorting the move lower, but we're going to wait for that weakness to play out and looking for reversals of levels for long entries. And we are testing this level here right now. It's about 14,890 odd. Intraday reversal right now, I don't think we've got enough in terms of a bullish reversal. And we are certainly watching how today plays out relative to this level. But ideally, to suggest some further gains, you want to see a strong close on this candle above the halfway mark of that preceding candle, just to show that there is some momentum to the upside. Then you could look at having a stop loss and a close below this 14,890 odd level, and then targeting a move back towards about 15,250. But of course, we could break this level today as well. And so if this level doesn't hold up and we do see a close below, we'll be sitting on our hands, waiting for weakness to play out, targeting a move lower to 15,465 initially, and through there, maybe even 14,285. But we're not looking at shorting a move like that. We're going to see where that price lands and where it finds some support, and looking for just that price to tick back up. Something like a bullish candle pattern, a bullish engulfing, a bullish harami, Morningstar, all these types of price action indications just show the price is ticking back up. And then we'd be looking for long entries at one of these levels. So not looking at shorts because of that longer term trend being up, looking for either reversal of the current level, or if it breaks, waiting for bullish reversals of one of the lower levels on the Nasdaq 100 or the US Tech 100. Now the S&P, similar but not quite the same. We did have that break of that 200-day simple moving average. And as we say, if we're giving it some leeway, I would suggest that, that longer term trend is still up. But with the price action that's, happened subsequently, I might consider that longer term trend now to be in a sideways range bound environment. Certainly if we do start trading back below that 200-day simple moving average, the short term action here does look a little bit bearish. We've got this M shape, could be a bit of a double top type formation above that 4,325 level. We did have a close below there, which does suggest that we could have a move maybe even down to 4,260 odd. And if we get through that, maybe even 4,200, 4,175. So there's a few levels on the way down. If you are looking at shorting, aware that stop loss, maybe a halfway mark of that big red-bodied candle might be a consideration. Alternatively, be waiting for the price to come down, looking for bullish reversals off one of our levels before finding new long entry onto that S&P 500. The DAX, the Germany 40, longer term trend is sideways, so we're looking at longs and shorts, and we're trading between the levels as we have been on the FTSE 100, which we'll look at in a bit. But most recent price action, we saw this bearish engulfing at resistance at that 15,485 level. We had this bearish engulfing from more or less overbought territory, and that has targeted a move, which it has now realized at 14,970. So what we're going to do now is we're going to watch how the price handles this 14,970 level for a bullish reversal. For a possible long indication, you want to see a strong close on the current candle. I'd suggest above halfway mark of that preceding candle. You'd have a Harami type formation, suggesting a strong tick back in price. Then we could start targeting, move back up towards that 15,485. Now, if we don't get a reversal, and instead the price fails and starts to break below that, then we'd start looking at 14,670. For me, when I look at breakouts, I like to use a closing price closing below or above a level as a breakout, just to add that, the market settling there at the end of the session. So that is a preference for me. All these charts that we're looking at are daily charts. All right. Also the FTSE 100. Now, FTSE 100 has really been conforming quite nicely to our levels on our charts. We had a bullish reversal. This is kind of what we're looking like on the other charts. We had this Harami type pattern. So we have a big red-bodied candle. We have that green candle, which is closing about that halfway mark of that preceding candle. So that was a nice little reversal. This one was supported by a move out of oversold territory, and we've had a rally up to the top, just short or around about that 7,700 mark. Then we've had this bearish engulfing, so a reversal off that level there, quite a sharp reversal, and that's targeting me back down to 7,410. Now, if you were short there, you'd look at having a stop loss close above that 7,700 mark. I think if you're fortunate enough to have caught that move lower, you might be considering just trailing that stop to maybe a one-day high, so maybe today's session high, looking at a close above that as a possible stop loss indication. But certainly waiting for new positions. We'll see how it approaches this 7,410 level. From there, we either want to see it a breakout or a reversal, something like we have seen in the past, like this preceding candle here where my mouse pointer is. We go back, there's another Harami type pattern over here. So there has been some nice reversals on that FTSE 100. It has been conforming quite nicely to the levels. Now, moving over to some commodities, starting off with Brent crude. Now, Brent crude, obviously it's finding some catalyst from tensions in the Middle East, the geopolitical tensions, the ongoing war now between Israel and Palestine. And we saw that sharp gap higher. We've had our first pullback from that gap higher. That longer term trend, we've said in previous weeks, does look to be up. Then we've had now an extension on the way up. We've had a breakout of this 89.10 level. Almost 95.40 a further target. But at the moment, that really is being tested. The price is pulling back. But certainly looking at keeping a long bias on trades on Brent crude oil right now. Looking at gold. Now, gold There's also, our assumptions on that is that longer term trend has been sideways. So we're looking at trading between the levels. Now we had this nice reversal off that 1810 mark. We traded nicely through to that 1865 resistance level. There was even a gap higher, and that was obviously induced by some safe haven buying on the back of the onset of the Hamas-Israel situation. Now that gap higher shows you some sort of strong momentum. It's considered a breakaway gap, first move in a new direction. And so for me, never like to trade against that. I know there's a lot of people that like to trade against gaps with the theory that gaps may be filled, but I think on a breakaway gap, that likelihood is a little bit less. Exhaustion gaps, on the other hand, are the ones that I trade, but story for another day. Trading through those levels, we've now broken that one of the higher upside targets at $1,950 per ounce, and we have now had a close above that. And so our next level of resistance, the next upside target, is 1,985. Now, if you are long on that, having a stop loss now, when the market's really run quite a bit, can be a tricky affair. But you just look at it relative to the expected reward, what you are prepared to risk. So we're looking at, about $35 an ounce there move. So maybe half that or a little bit. Maybe having that stop loss, something about 1935 might be a consideration from current levels. That's on spot gold. Now, copper also in a range-bound price environment. Now, an indicator, leading indicator of economic health. We did have a bit of a rebound there, which did start to fade. We have had some better than expected economic data out of China. Yesterday, we saw that GDP figure coming in slightly better than anticipated, about 4.9% quarter-on-year growth versus 4.4% assumptions or estimates, consensus estimates. And so we do have a bit of a reversal forming. It's not that convincing, but certainly, when we look at copper, it's worth looking at, if you're trading some of the miners, the big miners out there, the Glencores, the BHPs, the Anglos, and stuff like that. But we do have a bit of a reversal that has formed, suggesting a move up to about $8,200 per metric ton. And then I think looking at a stop loss and a close below that $7,850 per metric ton level. All right, that's all the charts from me. I'm Short Murison, Senior Market Analyst at IG South Africa. And thank you very much for watching.